Hey, hi everyone. Let's get started. Ajay ji, welcome to our webinar today.
Yeah, hi.
Hi. I'll give a quick brief of you to our MFD participants, and post which we are more than happy to listen to your thoughts on the stock market. And this is the time actually when mutual fund distributors, investors, and the large community needs quality advice from people like you because there is so much of noise and so much of comments coming from everywhere. So I'll give an introduction. So Ajay ji is the Group Vice President of Motilal Oswal AMC. He has more than 18 years of experience in the mutual fund industry. Prior to Motilal Oswal, he used to work with Canara AMC and Boexa AMC. And sir, I was seeing on Motilal Oswal AMC website that you manage 12 funds. So is that correct?
So primarily, I manage four funds, and then I'm co-manager in some of them.
Got it. But that is quite a remarkable thing that you oversee 12 mutual funds. So, sir, the format will be first 30 minutes you can share your feedback. We can have a Q&A, and the last 15 minutes we can take questions from our MFD partners. This session is being recorded, post which it will be shared with all our MFD partners.
Excellent. So generally, you want to talk about budget or markets first?
Uh, First, we can discuss about the budget and the repercussions it will have, and then we can add a flavor of stock markets on how MFD community can guide their investors in their investment journey, because especially people who have recently began investing into the stock markets, like less than a year ago, will definitely be seeing some bit of losses in their portfolio. So this is the time that we are seeing that investors want guidance that what is to be done ahead.
Right. Okay. Thanks, Adit, and thanks everyone for joining. Language-wise, English is okay.
Yes, yes.
Right. So I think this time budget, I will tell you a couple of slides which will give you some understanding of what is happening. So if you look at, I think people must have gone through the numbers. So I'll just show a couple of slides. You look at this slide. Now, if you look at for last 7, 8 years, the corporate tax used to be 3.3% of GDP, and the personal tax used to be 2.1%. Now, in last 8 years, corporate tax has become 3.1% of GDP, and personal has become 3.5. So there was this feeling that we are taxing too much to residents, and corporates are not paying enough tax, whereas individuals are paying a lot of tax. And I think last 2 years, especially the consumption slowdown, it was visible. Whether you look at FMCG numbers or you look at other areas where generally discretionary or non-discretionary consumption happens, but numbers were not very strong. So I think this is a very reasonable change that has come in this budget. So in terms of budget, I think there are few numbers which are more important. One is where this money will come from. Because at the end of the day, it is like you and me, it is just a PNL where you earn something, you spend something. And then our job is to understand whether those assumptions of how where money will come from, whether they are reasonable assumptions or they are aggressive. So the overall growth, if you look at in the budgeted number, the growth is 11 odd percent. Here, the people have question. Maximum question is about this income tax increase of 15%. Because if they let go of 1 lakh crores, then I think people have this fear that this is a aggressive assumption. I think rest of the numbers are decent. The other one is this dividend of income that will come, because last year what happened, more than 2 lakh crore from RBI. Now this year, I think that number will be little lesser. So some kind of disinvestment also needs to improve. Otherwise, we will fall short on numbers. Now, my take on this. When the corporate tax rate cut happened, the kind of industry thought the benefits will come, actually, they were lesser than that. So similarly, even now, we believe that even if when it is 1 lakh crore kind of extra money that will be available, generally it will be lesser than that, because if somebody has taken a home loan, they will not migrate to this new slab. So I think numbers that way, if I have to see consumption wise, yes, it is positive. Now look at the expenditure where money is going to be spent. So spend part, if you look at here, defense is something where I think we are still building growth. You look here, yeah, 13 odd percent. But the point is, even in 2024 budget, defense had seen increase in allocation, but money was not spent. So keeping that in mind, execution becomes even more important. So now my take on it. Whenever we have spoken to these companies, defense companies, it is not that money is not available with the departments or government. It is the supply side constraints. So, for example, Hindustan Aeronautics. Now they want to buy GE engines, but that from US GE engines were not available. That's why the money was not spent. So, across, I think after talking to experts, we have understood that it is more of a supply side problem. But road and railways, the allocation itself is lower this year. Even that Jal se Nal, whenever we are now, when we have interacted to companies, there is delay in payment from the government side for some of these schemes. So, considering this, the PNL of the budget, and now today, when the income tax rate also clarity has come, the tax bill was submitted. So there's no long-term, short-term capital gain change that has happened. There are certain changes related to certain sectors, but market now that kind of uncertainty is also over. So now I think it will be business as usual. So my take from budget is clearly the consumption. There is boost to consumption. Now how it will play out is that when I get extra 10,000 rupees, say in my hand, I may choose to save some of it, I may choose to spend something, or I may choose to pay my home loan, for example. If I have any leverage, I may choose to pay some part of it. So it's not that everything will go into consumption, something will flow into financial, something will maybe come into capital markets, somebody may increase their SIP amount, somebody may go and buy a new fridge, AC, somebody may think of buying a small car or two-wheeler. So there will be different usage of it, but yes, clearly consumption will improve. So this is all, I think, by and large about the budget, where consumption will increase. On the defense side, the capital expenditure is increasing. Rail, road, the expenditure, the budgeted numbers are not that attractive. In terms of, again, just summarizing everything, in terms of how government will make money, couple of assumptions may be a little aggressive. So over a year, we need to monitor that. Based on that, our fiscal deficit would be 4.4% of GDP. I think we may end up at 4.5, which is again a very credible number, because personally in this situation when there's so much of turbulence around the world, had they kept it even at 4.6, nobody would have said anything. They could have easily spent another 20 basis point on capital expenditure, but they chose to be more prudent about it. And in the long run, it helps. So I think this is on the budget I have. If there are any questions on budget, I can take them now, or otherwise we'll move to markets then.
Participants, if you have any questions on the budget, please feel free to unmute or drop your text in the chat section. I think we can, sir, move to the market.
Okay, now the interesting part, markets, what's happening in the market. So I'll tell you, in last 25 years, we have only closed 4 times negative in the market. Now, will this also be a negative year? And all those 4 years, the macro was fairly disturbed. This time, when the way we are placed, whether it is our current account deficit, fiscal account deficit, interest rate, inflation, commodity prices, especially the important ones like oil, I don't see that we have any of those challenges with us. So the important thing to understand is we have done well in last 3-4 years from COVID to now. Markets have done reasonably well. There has been sectoral rotation and we have made decent money. So now when world has got a decent option like US, where money is flowing in US, and the reasons are: one, if there be a corporate rate cut, there'll be improved earnings. Second, because their 10-year yield is at 4.5%, it makes sense. Why I would like to invest in Indian debt market at 6.5% yield, where I just get extra 2%, where my currency depreciation will be more than that. So there are options available. Does that make us any bad? My answer is no. Point is, now you have a couple of more options. So that shift is happening. But have we slowed down in terms of growth? The answer is we'll still be the fastest growing. We'll be the fastest growing country in the world with most of these stable macro parameters. So, given that backdrop, the next part is how our earnings cycle now moving. So from 2021, we have seen that Nifty earning has seen upgrades in last 3-4 years. Now is that, I think in last quarter, this is first time, I think in 12 to 14 quarters, when little bit of earning cut has happened. There also we need to understand that the earning cut, because last year oil and commodity, the earning, because there was expansion, yield expansion, you may say, spread expansion that happened in oil and gas and commodities. So those companies made a lot of profit. Now that led to improvement in earnings, and the earning upgrade happened. This year, what's happening is that that extra earning from oil, that is not available. Some of these commodities like steel and all, they are also under pressure. So that is not available, and at the same time, the large sectors like financials, IT, they have not picked up. So somebody has to do the pulling. Somebody has to pull the weight. But now, given the changes that has happened, I think the consumption will improve. IT, clearly the budgets that were stalled in the US, now I think those businesses will start taking decision. The whole AI boom with this DeepSeek and all that has happened, I think the overall spend, which could have taken, say, 2-3 years, that cycle will shorten. And we have seen this in last 2-3 cycles. When all the ERP implementation thing happened, eventually it came to Indian IT companies. Similarly, when the cloud boom happened, eventually it came down to us to implement it. Now with the AI boom, I think again, maybe 6 months, 1 year, we'll start hearing a lot of these in our IT companies, because then now from product, it will be more about adoption. So this is where I think we guys benefit the most, because when there is a mass commercial usage, this is when Indian IT industry really comes into the picture. So I think IT will do well. So I think some of these questions are popping. People want to understand valuation and all. So please understand, it's a very simple thing. And it always works in market. If a company is growing at 10% within same sector, and there's a company which is growing at 25% from the same sector, they will never be valued at the same PE multiple. Please keep in mind, valuation, you always have to talk about growth. Only valuation without growth has no meaning. You can find 0.5 times book value PSU stocks. You can find 10 times PE, so many commodity related businesses. They are not cheap. So please keep in mind, valuation vis-a-vis growth is the right question. Without keeping growth into the equation, we talk about valuation, it has no relevance. Because a 10 PE stock is not cheap if it is degrowing. A 40 PE stock is cheap if it is growing at 50%. So the key question here is that how is our growth playing out vis-a-vis valuation? Please keep this in mind. Again, I'm reiterating because there's so many pop-ups coming out valuation and I get distracted. So I'm just answering that. Please keep in mind, it is always about growth vis-a-vis valuation. Standalone, it will not help. So, okay. Now about Indian markets, how they are placed, this correction. See, this correction, most of the correction happened before result season. I mean, till 15th of January, good part of correction happened. And then the result season started. We started seeing IT results, banking results, which are better. Some of the pharma results, auto ancillary, auto companies results, for example, four-wheeler, two-wheeler numbers are fairly decent. Where the challenges is, again, consumption side. No staple companies actually gave better numbers than expected. Secondly, there was margin pressure. So earning cut primarily, according to me, is more led by margin pressure. And if you think about a business, first important thing is that you sell your product. And when there is enough growth, then your margin expands. Margin expansion happens because of raw material cycle, operating leverage, because generally, if I break even at say 60% utilization, if I go to 70, my margin expansion happens. But so there are, again, I'm saying there are part of economy which are doing very well, which are vis-a-vis growth, they are doing well, and there are certain part of economy they are not doing so well. Now, in last one and a half month, what has happened is because we have come out after such a good run, some correction can always happen. And then after, I think US provided a credible option, and there's this uncertainty that came because of what tariff he will put on which country, on which raw material. Now, when we talk to companies, even they are trying to figure out. Couple of them, companies we spoke to, the promoters are in US to understand from their partners, dealers, customers, how things will play out. So all market doesn't like uncertainty. When there is these kind of things happening, clearly you have a tendency that let's settle down, slow down, see how it happens. So as fund managers, we do not have any rush to go and buy every day. Let's understand. Let's see the result season, which are the sectors doing well, which are those companies that are doing well. And then we decide on if we have to make any changes to the portfolio. So I think this is what is playing out in the market. When there is uncertainty, clearly the high PE stocks, again, I'm not using expensive, I'm saying high PE stocks, they correct. Because if there is any kind of slackness in delivery, then there is no excuse. So in result season, if you see whether it is cheap company or expensive company, if they have not delivered, the stocks have corrected 15-20% easily. Most of the building material companies, they are very cheap in terms of PE. Still stocks are meandering, not doing anything. So I think given that backdrop, how we are placed, last 2-3 days also, market has seen decent correction. Now there are other reasons for it. You guys also know what has happened. So, but cut the noise. Ask yourself that which part of Indian economy there is challenge. And then you will get the answer. Is there a reason for us to close, maybe correct further from here? Because see, first 10-15% now, it's a froth. you are not sure whether I want to enter now or I should wait. And then result season is on and all these uncertainties are there. I mean, as a fund manager, I would like to wait. Why? I have no pressure to go and buy the same day when market is down first day. We'll see. So I think contrary view is within our house also. For example, my colleague Niket, he believes that this uncertainty will continue till March. So I'm giving you all the views. I'm telling you about fundamentals. I'm telling you about how earning for this quarter is playing out. And I'm telling you within also there are views whether this is a 15-day or 45-day uncertainty. But I think all of us are very clear whether if maybe 6 months down the line, 3 months down the line, if we'll talk, things will be much better in terms of at least this all these questions that people have in mind, they'll not be there because fundamentally nothing has really changed. There is no COVID, there is no war, there is no ILFS crisis, there is no taper tantrum, there is no global financial meltdown. All these 5, 6 instances that I've spoken about, none of them has happened as of now. Our currency markets are fairly stable. People are complaining about rupee depreciating, but we have depreciated lesser than other currencies. So that also, I think our currency is holding up well. Now with new governor, I think there will be focus on easing the monetary policy. There will be more money available. So that tightness in the market, I think should go. So I think this is how, and in terms of valuation, Nifty, I think is trading at 18, 19 times. Small cap is trading at 21, 22 times. Mid cap is trading at 26, 27 times. Now with the growth differential, where if small cap earnings are going to be higher than Nifty earnings, then 6 months, 1 year, clearly performance will catch up. So you need to take that call, which is that earning trajectory of what asset class, and then how you want to have asset allocation. So I think this is what I have on markets. Half an hour up, so I'm happy to take questions.
Yes, thank you, sir, for sharing your thoughts on the market. So I have one question. I have seen that Motilal Oswal AMCs have a very concentrated and focused portfolio. Like if I see your Flexicap, it has a 15 stock portfolio. So what is the rationale of this? Because when I see Kotak Emerging, maybe it has 50 stocks. So I wanted to understand the rationale behind this kind of portfolio construct because it is rarely seen, right? Such kind of focused portfolio. I think a demat account will have this kind of portfolio.
So, couple of things. One is we want concentration, but at the same time, you will not find that we will have same kind of names. So there is decent sectoral representation in the portfolio. See, what happens is you have 50 stock. In financials, you can have 2 names or you can have 8 names. And put together, you may say, I have 2-3%, whereas we will have maybe 6-7% of one from one sector. But if there is interest rate, suppose hardening happening, if there's pressure on NIMs, none of them will do well.
Correct.
So our point is that you work enough and have conviction. But again, all we have different schemes with different kind of portfolio construct. So if you look at our large and mid cap fund, you will find stocks between 2% to 6%.
Okay.
You will see our small cap, you will find 1.5% to 4%. You will see large cap anywhere between 1.5%, 2% to 4-5%. Couple of names are little higher, like HDFC Bank and all. But otherwise, generally 4-5%. So I think mid cap is because that category is small. You have only 150 names. And if you take out names which you don't want to hold, you will be left with 75-80 names. So there the concentration is high. In Flexicap, again, as of now, because we sold some of the names, but generally you can find between 15 to 30 kind of names. Niket runs little bit of higher concentration. He looks at mid cap and Flexicap. Whereas the other fund managers, you will find we have between 2 to 6% kind of it, or 1.5 to 4% based on the scheme mandate.
Got it. And
Yeah.
recently, I saw you have added some cash allocations to your portfolio. So, what has been the rationale around that?
Okay. So, in terms of cash, as I said, Niket wants to see that the Feb and March volatility should have limited impact.
Okay.
So there is little higher cash for the schemes that Niket is managing. For the others, the cash levels are between 5 to 9%, 8, 9%.
Correct.
2
Even
to
your
9% actually.
small
2 to
cap fund
7.
doesn't have much cash allocation.
Yeah. So even large and mid cap, I hardly have 2.5%. ELSs, I have 2 to 3% cash.
So, sir, given in the current market dynamics, which fund should our mutual fund distributor suggest to their customers in current market scenario?
See, the answer is very simple. If your investment horizon is 1 year or lesser, you need to be careful. But if your investment horizon is 3 to 5 years, you really don't need to worry. This question of SIP giving negative return for 10 years is, I think, I don't subscribe to that. So, according to me, if you have investment horizon of 3 to 5 years, you should look at our multi cap, small cap. If you're between 1 to 3 year horizon, you should look at our large cap, Flexicap.
Okay.
And so we have sectoral funds also. So clients who genuinely wants to create alpha, then they should look at our digital fund. Apart from that, I see because the balance category, we are in the process of changing portfolio. The earlier fund manager left some time back, so we are changing the portfolio on the balance advantage and multi-asset. So maybe we will connect with you again on those two schemes. Apart from that, I think we are fairly clear that somebody between 1 to 3 years, large and mid cap, anything less than large cap, 1 year, anything above 3 years and all, you should look at small cap and mid cap.
And right now there is like noise in the market that you should stop investing in small cap, protect your portfolio. Protection of capital is the most important thing. So what's your take on this? Because a lot of like I've been seeing AMP data that 83% of the SIPs are getting closed. So for every 100 SIPs, 83.
83 SIPs are
Yes,
stopped.
yes.
When?
So this is based on the January data. So there is high SIP stoppage ratio that even we are seeing in our business that people want to stop SIPs in small caps given the current market correction. So do you think people should stop SIPs when there is certain kind of corrections or continue as
This
is
is funny.
or add more money?
We are increasing, all small cap fund managers are increasing their allocation.
Okay.
Talk to any small cap fund manager, they'll tell you. And as distributors, I think this is our duty to tell investors now. What has gone wrong in small cap? Nothing, yeah. Has any casualty happened? Nothing. And the funny part is, people say small cap only. What is the difference between large cap and small cap? The difference is hardly 3-4% fall. And our portfolio is not fallen that much also. We have clearly outperformed benchmark and peers. So for that 3-4% fall in a span of 1.5 months, people have forgotten what kind of outperformance we have given in 3 years.
Correct.
So people are short-sighted here. I can understand stop SIP in equity. Large cap will not fall or what?
It has fallen in.
This is funny. That continue in large cap balance, will they not have equity component?
They will.
So I think, this is greed and fear cycle playing out. Suddenly there's so much of fear. But I don't think small cap fund managers, they will tell you this. We will be actually increasing our allocation happily. Yeah.
Okay.
Because if there's a tangible reason for me to do it, I can understand. Okay, corporate numbers are going bad. I mean, see, making a sweeping statement like it will be negative, this, that, for 10 years, stop SIP, sell everything. Okay, grandstanding, but then come down to the details. Okay, why? How much of earning cut? Which sectors? Then picture emerges.
Correct.
Otherwise, I can also say, I don't know, ठीक है. Big people, so ठीक है.
Even you will be covered all across the media then.
It's okay. I mean, see, it's
Sir,
been proven right once, so I don't want to say anything. But yeah, fundamentally, if there's a problem, I am telling you about it. Fundamentals are strong. Small cap balance sheets are strong. Leverage is low. Cash conversion is decent. Promoter now they have understood how to conduct their business in a more disciplined way. So I don't see a problem.
so Motilal, Nasdaq, the inflows in the Nasdaq index funds have stopped. So any clarity from the regulator that when can people start investing via Motilal again in your index funds of Nasdaq?
Arpit, you want to take this?
Yeah. So, as of now, the Nasdaq fund, we had stopped taking all the allocations, and even the existing SIPs which were running in, we have to stop basis the limit which we had already reached. So there is no clarity from the RBI that when this limit will get open or from the SEBI. So there's no answer to everyone. So once only we have a lot of redemptions only in that kind of kitty, then only it will be open for new allocation. By the time there's no chance for new allocation or even the existing SIPs which were there to start again.
Got it. So there is no clarity on when this will start basically from the regulator. Participants, do you have any questions that you want answers to help your clients in these volatile times? If you want to ask directly, you can unmute and ask your question. Nifty Next Junior Bs are good for investing. Request you to ask questions given market or Motilal Oswal AMC schemes or rather than ETFs.
Generally, how is the ETF performance during this fall? I heard that Nifty Next 50 has fallen more than anything.
Yes, it has.
A lot of people were so excited about it. Nifty Next 50.
It has been beaten left and right.
हाँ यार वो नेक्स्ट कपिल देव आता नहीं है कभी.
So in this kind of scenario, are you seeing that active fund management is the way to go ahead in Indian stock market? Because a lot of like Zerodha, Navi, now Angel One is also entered, and they're more going for passive funds, saying that you have a lower expense ratio investing. So do you think active or passive, which is better given the current market scenario where things are volatile, they are dynamic, things are changing?
So see, two-part answer. One is investing is not just about finding right stocks, it is also about managing risk. If today in my results season, if in my portfolio something goes wrong, I can act on it. If there is a business, there is something, some problem happens where I can easily see that there'll be a decent earning cut. I can act on it. I can save that. So investing is also about finding good ideas and monitoring them so that if any of these risks play out, we act. And secondly, on passive, see, we also have passives. But point is, yeah, Indian markets do not have enough depth. For some of these passive, which are very narrow, there'll not be enough liquidity also. There'll be so much of impact cost. That defense fund, one defense active fund and one we launched passive strategy and see what happened to defense stocks.
Correct.
So we have to be realistic. They can absorb small amount of capital. But beyond that, I doubt.
One question from Gajanan. Do you think digital funds are good with a horizon of 5 to 6 years? Digital meaning the technology sectoral funds.
Yeah. So digital fund is something, see, here there will be volatility clearly, because these businesses, now the trajectory of growth is not homogeneous. It is step function. It will be like this and then this and then this and then this. And sometimes this is like also. So when step function happens, you have to hold a stock for a longer period of time. Then you actually see the benefit of it. If you try to time it 1 year, 1.5 year, 2 year, it is very difficult, because digital globally, US, most of the market cap is captured by these digital companies only. The way DeepSeek alone impacted the markets, I think India clearly will see a lot of these companies and they will cater to a lot of sectors. So it will be not only dependent on technology spend, they'll be catering to a lot of these other sectors also. So I think digital is one space where clients should have allocation if they have investment horizon of 5 years, because the point is here the profit pool can be much larger. And these businesses, if one of them is successful, for example, some of these platform food delivery businesses, who would have thought the kind of money they are making now? So they have large size of opportunity available, and some of them will clearly come out as winners. So we need to make sure that we are present there, and if we invest right, if we pick right stocks, I think rewards can be, I think, much higher.
Got it. The last question from my end, post which we can wrap up this session. So if an investor has a time horizon of 3 to 5 years, which one Motilal scheme would you recommend that our MFDs can recommend their clients?
3 to 5 years?
Yeah.
I think you can choose multi-cap, small cap, any of these two.
Okay. RPG, please do share the product note on these funds. We'll distribute them among all the MFD partners.
For sure. I'll share with you.
Ajay ji, thank you so much for your session and sharing your insight. Talking with you really gave us some kind of comfort that, stock market is not heading for doomy and gloomy days. There is still hope, and this is just a minor correction that the market has seen. And these corrections do come every year. There is certain kind of correction, and we are just going through it. It's just that our MFD partners and us as well haven't seen a correction in the past 2-3 years. Post-COVID, people haven't seen this kind of correction, so there is more noise and more fear. So thank you so much. We'll stay in touch, and
Thank you,
partners. Yes.
Thank you, Ajay. Thank you, Adit,
Thanks,
and
sir.
thank you everyone for having us.
Thank you. Bye.